TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 15th, the fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Just think about that one. Hey, hope everybody else out there is having an extraordinary day. We must. It's fantastic Friday. It's fabulous Friday. Let's make sure that we do. The easy way to do that is to always remember that it's really all about being able to find the gift in every set of circumstance that life is going to toss at us. You just got to be a reframer out there. So here's what we're going to do today. We're going to go check out these markets. I want you to know how much I appreciate you being here. But the reality is this hour is all about you. That's right. It's all about you. I want to help you. So feel free to give us a call at 877-927-6648. If you can't call in, we've got you covered. Let those fingers do the walking. You can always send me an email, steve@tfnn.com. Really helpful if inside that subject heading you just put radio show question, and in the Tiger's Den, any ping will do. So let's go ahead and get this show started on a fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading up about 200 points. 25,909 is the print. It's about 0.75% to the upside, whereas the NDX 100 is up 1%. The semis are up 3%, 2.9 to be exact right now. They're up 39 points. They're printing out at 1392. So it's mean and green across the board. Spot volatility index down by about 6% or 77 pennies. Gold's up $7, struggling to get over resistance. We'll take a look at where that resistance point is. Silver is up 14 pennies. Light sweet crude is flat, leading the charge the upside big time. It is Ulta Beauty up $29. That's nearly 10%. Broadcom up 24. That's 9%. Amazon up 19, a little over 1%. To the downside, it's Tesla. Up $12, 4%. Adobe's off nearly 12. That's 4% and change. Whirlpool down 750, 5%. So we have things to look at. Of course, I want to look at what you want to look at. No requests thus far or just before we came on the air. So let's just go take a look at the general markets. Let's kind of just sift through the charts here, see what we see. If we start off, take a look at the equity futures contracts, the daily time frame out here. What you're going to see, if you're watching us on TigerTV, 4 different panels. On the left is the ES Mini. Next to it is the NASDAQ 100, the NQ. Then to the right of that is the Dow, and then finally Russell 2000. We start on our left-hand side with the ES Mini. What we're going to see is price right now is trading above the top of a weekly profile. What does that mean? Well, first, it depends where we close the week. If it's above 28.25 and 3 ticks, 75 cents out there, then what that tells us as far as resistance, you've cleared it all, or it has at least cleared it all. Now we'll go figure out, or we can find where the next resistance point is, but right now, price is trading above resistance. That's a bullish outcome for the week. Old resistance should become new support. So how do you know if it's false breakout? A false breakout, let's say on Monday or Tuesday, assuming there's a close above it, you'd see price get down below that level. But until that happens, it's a breakout party. And of course, that takes us to the NDX 100, the NQ, which a couple of days ago, 2 days ago to be specific, closed above the same profile, a weekly profile, 72.41. So that has the freedom to run. We'll take a look at levels of where this will run to. In the case of the Dow, which has been weak, primarily driven down, not only, but primarily driven down by Boeing. And you and I have taken a look at Boeing. We certainly know where support is. I mean, if there was a guess, remember on the day when Boeing stock was dropping through the floor and we found out where the floor was, you and I, if ever we were wondering, at that stage we said, well, we now know why Boeing stopped where it did, because it came back to a breakout area. We'll take a quick peek at that. Well, let's do that. First, let's just finish here with the Dow, which is above 25,818. That's the top of its daily profile out there. That says the Dow, the equity futures contract, wants to make a run for 26,263. The Russell 2000 also closing, well, I don't know if it's going to close, trading above the top of a daily profile. Now, in its case, 1574 is really its next hurdle that it needs to clear. The hurdle being the point of control or the center of the box where both buyers and sellers believe that the Russell 2000 equity futures contract is fairly valued. So it would need to clear that area before you and I would go ahead and make the call and say 1607 is next up on its destination. When we take a look at Boeing here, the day that it moved lower, which was on March 11th, and then began to trade higher. It went right down and tested just below, but in essence, it was testing the breakout. Breakouts are wide price spread, accelerated volume. When you have gaps to the upside, those are wide price spreads. You just have to visually fill in the blank space out there. Gaps are our friends out there. And in this case here at 367.78, the last the last 4 of 5 trading sessions have tested that level. Now, that's a beautiful thing. We talked about on the show at that stage that, price was trading around 370 or so when we began taking a look at it and said, hey, if you were one that had a hankering for buying Boeing, then was the time. You've had opportunities now several times out here. Likewise, and we said from a trade management standpoint, you would close out that long trade or consider closing it out if you saw a close below that breakout area, that window, that gap to the upside out there. We can't control what price is going to do. We can only control what action we're going to take. And the role of you and I is always to be able to identify support and resistance. In an uptrend, you want to go ahead and buy support. In a downtrend, you want to sell resistance. We've got these different tools that we get to use to help us identify that. Now, where is price headed to out here when you are above when you're above resistance levels? Well, the easiest thing for me to do is to go take a look at the equity futures contracts and understand its horizontal trading ranges. Horizontal trading ranges are established by weekly, daily, monthly, or whatever time period is that I want to use, closing and opening sessions. When you and I take a look at a candle, and that's what we have on our screen out here, we see the body of the candle. In this case here, they're either colored in green or red, and then we see the extreme emotion of that time period. We're looking at a daily chart, so the extreme emotion are going to be the wicks or the shadows, the upper and lower. But what the true essence of price is, when you think about it, it's where did it open and where did it close. That's really where the rubber hits the road, so to speak. So in knowing that, we can take a look at all those opens and closes on different time frames, because the closing on a daily basis, well, it's going to at least have 4 different closes than a weekly would, right? The weekly open's going to be, the open on Monday and the close on Friday, and the daily, you kind of get the picture. And the monthly is going to be different. So that's why you take a look, and when you're looking at these charts here for the ES Mini, they display the daily, they're blue, the weekly, they're green, and the monthly, they're red. Now notice that the ES Mini is up at a level of resistance, 28.35. with another level of resistance above that, 28.45. What's that say to you and I? Right now, as we close the week, even though we've got a breakout of the weekly profile, the S-Mini is hitting resistance. Doesn't mean it will turn lower, but it is trading right now into its weekly resistance area.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Finally, a golfer hitting a shot at the TPC out of an area that I'm very familiar with. That was, I think his name is On is his last name. Is it Ben On or something like that? He was on the second hole and hitting it out of the straw on the left-hand side there. The straw being all the woods and everything there. But he hit a second shot onto the green. These guys are just simply amazing. Hey, speaking of amazing, we were taking a look at these horizontal trading range boundary lines. Subscribers are going to get access to an archived workshop on this on the 27th of this month out here, and really cool tools, especially cool when you've cleared other levels of resistance because you're trying to identify where's price headed to. Now, someone might look at this and say, oh, it's confusing. Why do you have daily, weekly, monthly out there? Well, you need to understand where, if you're driving down the road, it's kind of like Google Maps or what have you. Let's say you're going from here to Miami. You always like to know where the traffic is. At least I like to. And so in this case here, this is our version of traffic on a chart. And what it helps us understand is in this case here, if in fact the ES Mini is going to break out to even higher highs, we know that it's got to clear the traffic jam at the 2845 level. It's monthly horizontal trading range. Okay, granted, we're only halfway through the month. That's okay. You just want to know where that traffic is. So right now on a weekly basis, we know that what price has done. We've gone down and tested. The ES Mini has gone down and tested support, very close to it. The weekly level of support would have been about 27.21. The actual low that we saw was 27.27 out there. But we can see what price was doing. He had a hammer candle that formed on a daily basis. So the lows were rejected. You knew where support was. Buyers and sellers are always communicating to you and I out here. And then prices run up to a natural level of resistance, certainly on a weekly basis. So it just traveled between the weekly profile, not the weekly horizontal trading range out there. We can use these for intraday time periods as well. So here's a 5-hour time period, and we can see that price as it got to 28.36. That was a horizontal trading range on a shorter term basis. It was an area of congestion, so to speak, out there. The NQ as another example. Now the NQ strong dog out here. So for those of you looking for the markets to move lower, You better send that RSVP, get an RSVP from the NQ, because what it's doing as we speak right now, it's above the resistance from its weekly and daily TAS market profiles. It is now above the monthly horizontal trading range level of 73.09. You close above 73.09. I don't know if we will or we won't today, but if you do, if it does, then what you're looking at, this is telling you it wants to move up to its next level. And the way you use these horizontal trading ranges, they are like being on an elevator and you know where the floors are at. Sometimes people get off, sometimes people get on. So bulls or bears, buyers or sellers out here. So this is suggesting to you and I, the NQ wants to head to the 74.91 level out there. The intraday chart, again, a 5-hour. I'm just going to a 5-hour chart here. We talked about that yesterday. And this says 73.80 is the next resistance point out there. If we take a look at the Dow equity futures contract, it found support this week at the weekly horizontal trading range level at 25,268. And now it appears to be headed to 26,161 out there. So you can imagine if Boeing continues to trade higher out here, it will easily, or should be able to easily, go ahead and pull the Dow to the upside out there. And here is your 5-hour time frame. We can see that price is above a resistance, just a diagonal resistance. This little pinkish reddish line out there above 25,837. So a move to 26,038 is what appears to be in store for it. So that's the overview of our markets out here. Let's go to our, well, not our phone lines, because nobody's on the phone. We'll just go to our email lines out here. And the first and only at this time email comes from VMware. And VM says, I'm long QCOM and Square, SQ. They're not moving, even though the market is going up. Please suggest resistance levels and stop loss on daily charts. Appreciate your help. Learning a lot from your show. Well, that's cool. So if we go take a look at, so first, you say they're not moving higher. And they're not moving higher. Both of them have one thing in common. They love Stevie Wonder. They just love singing in the key of G. What do I mean by that? Take a look at Qualcomm out here. If we take a look at the daily chart for Qualcomm, we go to the lowest low that we can find out here. That was on January 31st, and we just start doing our version of the Chapman wave. We will see that what Qualcomm did a couple days ago got to that wave number 7. That's designated by the letter G on my chart. Why G versus 7? Well, because I use other numbers out there that show us our Tommy DeMark setup 9 count. So otherwise it would be too confusing. So now what we know, and so when you get there, you're respectful of the fact that that's where you could, not will, but could see some type of turn. And so over the last couple of days, it's like, hey, I'm not exactly sure. But it looks to me like the real key area, first, as far as a stop, well, you'd have to say it'd be below Stevie's green line. That's at 54.19 out there. Where this is headed to, what you're going to want to be watching for since you're long QCOM, is a trading session of January 15th. You want to see this thing be able to close above January 15th's high. That's not the swing point, but that is a key level of 57.40. That's that green solid line out here. So no reasons that Stevie sees to exit Qualcomm, but just know that it's got the cautionary sign out there. In your triptych, by AAA, it just says be careful out there. Could be a little construction. Now, Square doing the same thing, also singing in that key of G, because if you start from its lowest low, which was on December the 24th, or 6th out here. Should be the 26th. I don't know why I said September 25th on mine, but it doesn't really matter. Here, all the way out on March the 1st, that's when it got to that highest level, which took it to wave number 7. And then we saw a sell-off. Now, the beauty here inside of Square is that topping signal, so to speak, pulled price back to test a level of support. Now, never got down there 4 or 5 days ago. That was on March the 9th, but moved down to test that level of support. That's that red solid line out here. And so, okay, I don't see anything negative. Where's that red line? That's the trading low of, looks like February the 9th out here. And that February 9th low, to give you the number, that looks like it's 70.23. But don't trust my math. Go check out your own math out here. So I take a look at Square and I take a look at Qualcomm. both really doing the same things out here. QCOM, if we take a look at daily, weekly, monthly for profiles and so forth, Qualcomm above the top of a daily, up top of a weekly, inside the monthly. I don't see any reason here to exit this position or to give you any different real stop level, so to speak. And Square SQ, this has a slight resistance level on a daily basis at 79.28 that it would need to clear. Above that would be a beautiful thing for the bulls, but you're above the weekly profile. Last week was a test of the top of that profile, old resistance that was tested as support, so that looks good. And the monthly, you're just in between profiles out here. So in summary, I don't see a reason to jettison out of either of those. But it sounds to me like you're nervous because you've asked me this question a couple times this week. There's never anything wrong with taking profits. Those stocks are singing in the key of G. Maybe you want to go ahead and do a dance tune and cash out and take your profits. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 178, S&P 18 points right now. So let's go to our next viewer, listener, caller by email, that is. And this one's coming from R. Hall. I like the last name because you're probably familiar with the Hall wines, Catherine Hall specifically. They make some pretty tasty wines out there. Specifically, though, I do like that some of the labels just have Hall on them. Others are Catherine Hall, and they've got some pretty cool library wines. And they've had several in the 100-point category out there. The 2014 Catherine Hall is especially tasty. Yeah, this is Tasty Friday. It'd be nice to actually pour a glass of Cab. We ought to do that, don't you think? Don't you think on Fridays we ought to, although I'm not really that great at drinking in the afternoon. Catch me at 5, though. It's a whole different story. In any event, let's not sidetrack too much here. What our hall is looking for is long entry into Michael Jordan, MJ. That's right, MJ. So looking for an entry in MJ, short to long term. Could you show the task profiles? We can. And share your opinion. Thank you very much. So let's take a look at this. It's actually Bob. But in Colorado. So first, you're looking for an entry point. This week was it. This week was it. Well, let's go take a look at this chart right here. Here's our daily chart. We'll go back and take a look at profiles, but we didn't necessarily need profiles to help you identify an entry point. And now we'll take a look at the next one. So here's what we know when we take a look at MJ. And MJ, by the way, that is the... Well, let me tell you what that is. It doesn't show on that chart, but it'll show on this chart here. This is the Alternative Harvest ETF out there. What does that mean? Does that mean this is the pot ETF out here or something? Somebody in the den will know. They'll know whether it is. But yeah, Alternative Harvest it must be. But and we're talking about glass of Cabernet. How much fun can you have? Now, when we take a look at this equity out here, and we see how it bottomed back here in December. It was forming that Tommy DeMark setup 9 count. It was bar number 8, which is not unusual for bar number 8 or 9 or the bar following 9, where you see either a high or a low. When it formed a high out here on February 5th, it also formed an 8 count. Now, not every 8 or 9 count is going to make a turn. And when they don't, for example, the situation was back here on January 11th. Now, the 10th bar on the 12th was a higher high. That didn't turn out to be a turn. That was just a sideways move. Remember, you got 1 of 3 options, either a turn, a sideways move, or a little bit of a hiccup. And a up move, a little bit of a pullback out there. That was the hiccup variety. And when you break through that hiccup or sideways variety, boom, you're going to go to higher price. That's at least its message. You've got to figure out where that higher price was. If you use the 9 count, you would have said, oh, we're getting to count number 8. We should be kind of careful here. Another one of those counts. All right. Now, where are we at? Well, here we saw this little pullback, and then it created another 9 count into February 28th. What's nice about that is I go ahead and decorate the chart with support being the low of that 9 count. In this case here, it's a trading day of February 15th. And that creates this support level. Support or resistance. When you break through resistance, such as the 9 count that formed that bottom back here in December, there's that green solid line. Once you close above it, tells you you've got a change in trend. Now, it's not an early warning system, but it is a momentum system out here. And it helps you to identify support or resistance. Likewise, you break through support, says you're headed to lower price, and you've got to try to gauge where that might be, and you can use a number of tools out there. So this week, was it this week? It was a trading day of March the 9th. No, it was Friday, so I take that back. Friday, when things were pulling back, MJ was doing what? It was testing support, and it's taken off from there. Now, Stevie's developed this new system out here. I really like it, but just kind of completing the formalization. Is that a word out there? I just created a word, formalization of it. And it's now, at this stage here, it's this blue dashed line, that little speck out there. March 7th high would be the next momentum move higher out there. Now, to a certain extent, you didn't need Stevie's blue dash lines and so forth. You could have just taken a look and seen, hey, that was a bearish engulfing candle out here. And so you break through that. You could say, okay, that's an indication that we're headed higher. So the high of that session, you're looking for an entry point. If you were a chaser versus a pullbacker, I love these words, that high is 37.65. We're not there yet. So you're looking for an entry. Hey, a pullback to Stevie's red solid line at this stage of the game. That's in the 34.52 level. That would be it. If you want to chase momentum, wait till it clears the high, closes above the high, not just clears it from March the 7th out there. You had asked for the profiles, and the profiles show the following. You've got some resistance on the daily at 37.64, but support at 36.08. That's going to be above the level that I had given you from last Friday. On the weekly, you've got resistance at the 38.35 level, support at 32.53, and the monthly resistance at 39.31 out there. So that's what I see when I take a look at alternative harvest ETF, whatever that is. But I think we probably all know. And let's go have a bottle. A bottle would work, of the 2014 Catherine Hall. It is a yummy Cabernet. That's if you're into Cabernets. So we got another message here. This is from JT in New York City. Oh, Jay, have a good golf game out there. That's a beautiful thing. So, Steve, are you bullish or bearish on the euro US dollar for the next month? Oh, man. So let's go see what the charts are. Let's not say what Stevie is. Let's go see what the charts are. We take a look at the euro. So what do we know in taking a look at the daily time frame chart for the euro? Just simply from a trend line standpoint out here. And what this tells us, JT, is that prices run right into a short-term trend line. Now, you're asking from a monthly standpoint. We're going to go ahead and try to pick this apart. Looks like we've got about 2 minutes. So a little trend line from the trading high of February 28th out there. That takes it takes into account the high from March 1st, and we can see that price right now is stopped right there. If price can get up above there, there's another resistance level that was established from the high on January 31st and then touches that February 28th level. So there's your resistance. Then longer term, you've got the high from the trading session of September 24th all the way to the high of January 10th, and that becomes your resistance zone. So if you're asking, is the chart bullish or bearish? We're certainly in a counter trend move. Prices run into its first area of resistance. It could get higher, meaning the price, if it gets up to that ultimate level of resistance, that trend line, in about the 1.142, 1.1416, somewhere around there. It just depends on a daily basis when and if that happens. But price is at resistance. That resistance out here. Now, you asked about a longer-term time frame because you're asking for the next month, and we're looking at a daily time frame chart. Do these trend lines change if we put a weekly time frame out here? And the weekly time frame basically is taking us back to the high out here from September 24th and the high of January 7th. And not until price closes above that do we really have any kind of real counter trend, rally, change in trend, or anything along those lines. We're kind of right in the middle here. So I don't like being in the middle. That's called monkey in the middle. And from a trade standpoint, I don't like being in the middle either. I think we've got to go, we're sort of neutral right now. But price could most certainly move higher. Oh, that's easy to say. You could easily say price could easily move lower. Well, it could. I think we're right in the middle between support and resistance. Great.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's finish off, take a look at the euro for JT. And I've just switched over to the futures contract. And that way we can have the active price right now. And so on a daily basis here, JT, so you know there's some resistance overhead. We have a bullish structured daily profile, meaning the center of the box is much closer to the bottom than the top. And we're a decent amount above the center, 1.1397. So this suggests to me that, and you asked what does it look like over the course of the month, as long as price holds this level, 1.1371, odds favor that the euro is going to head higher and head up to that longer term trend line that we looked at, which is also the top of the daily box right now, 1.1497. So, you know, if you're asking me not to be a middle of the roader when it comes to that, well, you just got your wish. No middle of the road. Stevie says resistance overhead, but should head higher, 1.1497. So no other questions in the queue, nothing in the den, pretty quiet out there. Everybody must be watching the TPC tournament and just watched Jim Furyk hit a nice putt on 17, and you know everybody's kind of leaving the flag in these days. And now I don't know if it was a good thing or a bad thing. He hit dead smack middle into that pole, and the ball did not drop in the hole. It had some speed on it. It had a little speed on it, and so you know, maybe it would have run past the hole. But either event here, S&P wants to take a look at Nugget. Let's take a look at Nugget. So in order for the Nugget to really get moving to the upside, S&P, what we're going to have to see gold do is clear this level. And you're going to say, come on, really? Yeah, clear this level. So if we take a look at, here's a 30-minute time frame. So we're just looking at what's going on the short term out here. Is that okay with you? Apparently the answer is yes. Not that he answered, but if we take a look at it, and we just use the simple support and resistance lines out here, and you were asking yourself, why did gold stop where it did today? Why did it stop at 10 o'clock this morning at the price point? Because I know that's got to be a question everybody was asking out there. Why did it stop at about 1304.50? Well, the simple answer is Stevie's green solid line. It's not really my line, but it's our line out there. And it's not like it's a line, it's a line of resistance. And what we mean by that, it's just this simple 9 count out here. And once you get one where you have 4 closes, but we have a close that is below the close of the bar 4 bars early, and you can do it 9 times in a row. You get that designation. You get that trophy out there. But the cool thing about that trophy is it sets up these hidden, they're not hidden because they're on our charts, lines of support or resistance. So price stopped right where it did. Remember, we talked about how the body of the candle is the essence of price, not the wick. not the extreme emotion during this 30-minute time period out here, just the body of the candle really tells you, or trails you, that would be a new word, what's going on. So that's the level, S&P, in order for the nugget, because of the directional correlation between it and the GDX with regard to its correlation with regard to gold, directionally speaking, this is the level that is on a daily, intraday standpoint, the key level that price needs to move above. Now, because it didn't take that out, doesn't mean it's going to move lower. Not necessarily. That's not what I'm trying to say here. I'm just trying to be able to express to S&P and now everybody else, hey, when we go take a look at Nugget, just to have a perspective of what it is or it isn't doing out there, because it's really likely not to churn higher until you see gold clear this next resistance level out here. So now, let's go back and take a look at it. Let's be thorough out here. And by thorough, I mean, let's be like a thoroughbred. NUGT is the ticker symbol. Let's go look at the 3 time frames out here and get a feel for it. Now, you know, S&P, I sort of hate looking at the nugget because it's a 3-time ETF for really all of our profile information and so forth. Look at the right-hand panel. This is the monthly chart here for NUGT. It would scare the heck out of us, right? Why would we invest in something like this that was once supposedly, actually because of all the reverse splits, was trading at 17,458 at the highs, and right now it's 1966. We wouldn't do that. So it's really hard for me to be able to, for you, and I have them out here, but these profile levels, I'm not saying they're not worth a hill of beans. I'm just saying the hill of beans that are worth more are not the triples, but instead the singles out there, because now we have a little bit of a different perspective. And not that the GDX wasn't up at a pretty high. When they say high, we're talking 66.98. It wasn't 17,000 or 14,000 or whatever it was. And here on a monthly basis, now we've got something. Is that okay if we just look at the GDX for our kind of our feel for what is going on inside the mining sector out there? I hope that I get a second yes to that, because here what we can see is on a monthly basis, prices over the top of that profile. And when it's over the top of the profile, what's that say to you and I? That says, hey, that's bullish, unless it's some type of top that we don't, but it's bullish versus being bearish out there. You know what I mean? So the monthly says pretty good. The weekly, the new profile that formed this week, if you're wondering why did the GDX maybe stop where it did this week, well, just look at the top of the profile that formed last week. So this has been in place now for 2 weeks out there. 23 bucks, even Steven out here. So now we know where there's a little bit of resistance out here. You're at 22.30. This is not bearish. It just price got up to resistance and just wasn't able to clear that. Actually, if you look at profiles, you turn off price out here. Well, you don't really need to turn it off. You can see the profiles on the right-hand side. When they form, where the bottom is above the prior bottom, the top is above the prior top, it tells you you've got a simple profile uptrend that's in place. That's what you like to see. So everything looks hunky-dory, just simply that 23 bucks is the resistance level. Now, on a daily basis, what we can see here is the top of that box is 22.58. And it's a bearish structured box out there. So what you want to see if you're long the GDX is you want to see a close above 22.58. Doesn't look like we're going to get it today, or we could get it today if gold does its thing. And we know what to look for in gold. I'd be watching gold with regard to what the GDX is going to do more than I'd be looking at the GDX to tell me what gold is going to do. You kind of, you know what I mean, out there? I think you do. So support inside of the GDX would be 2160. So that's what I see. Now, the only other kind of negative thing, and it is kind of a negative thing, is that what price wasn't able to do today. Oh, that's the nugget. Let's do this here. Let's stay with the GDX. I don't know if it's the same or not. Probably is the same, but let me just go over and take a look at it. Yeah, it's the same. And what I mean by the same is that, today, as price got up to 22.57 area, that's Stevie's green line, it also found resistance there. And that would be another nice thing to see the GDX close above. But it's really going to take Goldilocks, truly Goldilocks, in order to make its move out there to, get to higher ground. So I hope that the analysis for you for Nugget, which applies to GDX, which then correlates to the gold contract, I hope that helps you out with regard to support, resistance, and so on and so forth. That was pretty good timing. Takes us right into the break. And then we go to the 2-minute warning out there, and we'll figure out what we're going to do there. How about that Tiger? Tiger! A quad on 17. Dunked it into the water twice on that hole. And he's still 3 or 4 under. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. We've got a request from our tarpon fishermen out there to go take a look at Aurora Borealis. Have you ever seen the Aurora Borealis? Very cool. I got to see it when I was in St. Petersburg, Russia. But this, we're going to take a look at the Aurora Cannabis Inc. out there. These guys are rolling huge spliffs out here. And the question was, is it a long? It's more than just long out here. If we take a look at what it has done this week, just on the A to B equals CD terms, and interesting, its ticker symbol is ACB. We'd be looking at the swing point from February 4th, 67 million shares out there. And when we take a look at what it did, past that B point, and we'll put in the A to B equals CD pattern out here, and did it with accelerated volume. And it did it with wide price spread, 133 million shares out there. That's a confirmed sighting of the Aurora Borealis out there. You know, very cool, psychedelic. Isn't it funny they would call? Do you think, is that why they called it Aurora? Probably not. But Stevie would say, hey, not bad when naming the stock out here. And if we take a look at it, it's got a confirmed A to B equals CD into the 1042 level. But You know, when we take a look at this tarpon, what you and I are noticing is that the retracement, which, by the way, it found support at the bottom of that bullish structured profile out there, which was at 673. That's the C point, which was on the trading session of February 12th. It was only a 44% retracement out there. And you know what that tells you and it tells me? It tells us that this is likely going to do more than a 1-to-1 A to B equals CD. And that takes it all the way up back to that bearish engulfing key reversal session from October 16th. So Stevie says, the charts say, for ticker symbol ACB, she's headed, or he's headed, it's headed to somewhere between 1059 and 1253. So, folks, speaking of Aurora cannabis out there, stay tuned because instead of Dave not being here, Dave is here for those of you that are Cheech and Chong lovers. So have a great weekend. Thanks so much for being here, and we'll look forward to seeing you on a magnificent Monday. Take care, folks.
Since